We had many meetings in my former capacity. Yes. It was all about let's leave the bank. The industry
Well, dear all, now comes the difficult part, just after lunch, but I'm very happy you're still there, and I'm sure you will not be disappointed, because it promises to be a very interesting afternoon. And as I said, the second panel with CEOs and chairmen of 4 banks, we really would like to make a highlight of that, of this day. So, but the difficult part is always after the lunch, and we found a very generous volunteer to start, Pierluigi Gilibert, Director General at the European Investment Bank. He will make an opening speech for the first panel, and so we have the moderator arriving, so we can start. Joanna Drake, Director at DG Entreprise, will moderate this panel, so it will also be very interesting, I'm sure. So, but perhaps Pierluigi, could you take the floor, please?
Thank you very much, and thanks above all to the organizers of this conference for their kind invitation to share my ideas on this crucial topic of access to finance for Europe's SMEs. This is indeed one of the main policy objectives of my employer, the European Investment Bank, and I would say European Investment Bank as well as European Investment Fund, which is our sister organization entirely devoted to the support of SMEs in Europe. To give you an idea of our commitment to the support of SMEs in Europe, let me recall that last year the EIB lent more than 12 billion to banks in the EU for on-lending to SMEs. This is almost 1/4 of our total lending in 2012. To complete the picture of the support of the EIB group to SMEs, let me also remind that the EIF last year, committed 1.4 billion of fresh funds to venture capital initiatives in Europe, as well as 1.2 billion worth of guarantee to support bank loans to SMEs. Now, looking ahead and following the 10 billion capital increase that the EIB just received, which is now being implemented, the EIB has prepared a range of new measures to support growth and employment in Europe, including new measures to facilitate access to finance for Europe SMEs, particularly the more innovative ones. Our business plan for the next 3 years foresees increasing support for SMEs for a total amount of new lending expected to be around 40 billion. Naturally, all this is unlikely to be sufficient to turn around the current difficult situation in which SMEs in Europe are finding themselves in, unless additional lending is unlocked from other sources of capital, both traditional lending sources and new ones. Now, as we all know, the economic downturn, which started about 2008, is still exercising considerable financial pressure on SMEs across Europe. All the recent surveys of SMEs' access to finance in Europe are all reporting a decline in credit availability, a worsening of terms and conditions, and falling business confidence among SMEs, meaning that when looking into the future, European SMEs generally expect the continuation of current difficulties, above all in accessing bank loans. There may be varied reasons for these situations, but certainly one of them is the fact that banks in Europe, and elsewhere as well, are deleveraging, that is, targeting a reduction in their risk-weighted assets, including loans to SMEs, tightening their credit standards, and increasing their margins, all this to adjust to new regulatory requirements demanding higher capital ratios. Clearly, the entire financial system in Europe is changing under the impact of a crisis, and there is a new balance to be found between strengthening the financial sector to prevent future financial crises and ensuring that banks continue to fulfill their role as efficient intermediaries between savers and investors, including SMEs. Finding this new equilibrium will be a difficult exercise and will take, above all, much time. Meanwhile, this attitude on the part of banks is unlikely to be reversed, and it is therefore crucial that alternative channels of finance be made available for SMEs. Now, in considering these alternative funding channels, I will look first at the equity market and then at conventional and less conventional sources of debt. I will briefly cover both market sources as well as the sources of public support for SMEs, including the role of EIB as a policy-driven public bank. Now, it goes without saying that SMEs need a balance of equity and debt finance, and that this balance shifts across the SME life cycle. The private equity market, and in particular within it the venture capital industry, can be important sources of long-term, stable equity capital for SMEs, in particular for the most innovative ones among them. However, for the bulk of their financing needs, the majority of SMEs continue to rely on debt finance, and they look at banks. And a recent survey showed that only 7% of European SMEs use equity financing, and it is generally the larger and the high-growth SMEs among them which are willing to accept outside investors. But even for those SMEs open to third-party investment, the situation is not ideal nowadays. Not only the European venture capital market has always been much smaller than in the US, both in terms of percentages of GDP and of SME financing, but European venture capital managers also tend to target mid-caps and later-stage SMEs. On the contrary, in the United States, where attention is mostly focused on providing seed money for startups. In addition, not unlike what has happened in the banking sector, a falling risk tolerance among venture capital investors has reduced the overall offer on venture capital funds in the last few years. Indeed, European private equity market experienced a substantial drop in activity between 2008-2009, and while there has been a modest rebound since then, it still remains at historical low level of activity. The European Venture Capital Association estimates that venture capital investing was less than 4 billion in 2011, and preliminary figures for last year indicate an additional decline. There has also been a shift among venture capital investors from earlier stage investing to later stage, aggravating the market gap for seed capital in particular. Now, public sector sources, of which, as I recall, the EIF is an important one, have been active in trying to fill this market gap. As I already noted, last year the European Investment Fund invested a record 1.4 billion in new venture capital funds in Europe, an increase of 20% over 2011. It thus played a very significant counter-cyclical role in this market. But in the longer term, Europe needs appropriate incentives to bring in new investor classes to ensure a vibrant and diverse venture capital market that funds a wide range of innovative SMEs. This is, at least in part, starting to happen. Some of the gap left by the fall in private equity investment is being indeed filled by what we call business angels. That is, private individuals, family offices that invest their own personal wealth into equity of SMEs. Business angels are now attracting visibility as provider of capital for startups or early stage companies, not least because they are present in almost all sectors and regions. And since business angels are often themselves experienced entrepreneurs, they also are an important source of business development advice as well as management support for SMEs. We at the European Investment Group have recently expanded the scope of our 5 billion venture capital investment fund to include co-investments with business angels. And we are seeing significant interest in certain parts of Europe, particularly in Germany, where this new initiative has been introduced on a pilot basis, as well as from other countries, such as Austria and Spain, where we hope to replicate the same initiative. More generally, the EIB Group continues to underpin European venture capital through partnership with national equity funds and continues to look at new ways in which we can stimulate early-stage innovation, such as financing technology transfers, and also for ways to crowd in new investor categories, such as corporate investors. There are, however, other ways to improve access to finance for SMEs outside the traditional banking channels. In this context, I would like to mention 3 initiatives taken by the EIB recently, all of them designed to develop alternative sources of SME finance. Our first initiative is meant to revitalize the asset-backed security market for SMEs loans. Asset-backed securitization grew rapidly in the decade leading up to the financial crisis of 2008, as they provided an attractive way for banks to reduce risk, raise liquidity, and improve capital ratios. The SME asset-backed security market was a relatively small part of a much larger ABS market that focused mainly on residential and commercial mortgages. However, all these markets, including the market for SME-backed ABS, grounded to a halt in 2008 with the bankruptcy of Lehman Brothers. Now, the subprime crisis, as it came to be known, impacted the reputational institutional investor head of the ABS originated from securitizing SME loans, in spite of them showing lower level of defaults than their mortgage-backed counterparts. Indeed, the rating of SMEs-backed ABS tranches have proven to be comparatively robust during the crisis, particularly for those initially assigned with the highest rating class. For example, senior tranches of SME ABS issued in Europe displayed an average annual default rate of 0.2% only, and around 85% of AAA tranches maintained a top rating between 2007 and 2011, compared to 30% only for AAA residential mortgage-backed securities. It may be the case, therefore, that the drastic shrinkage of the whole securitization market results from the poor performance of only one part of it, and that SME-based ABS suffered unfairly because of this reputation fallout. Now, based on this observation, the IB Group has just launched an initiative consisting in the IB acquiring newly issued senior tranches of SME-backed ABS, while at the same time the EIF guarantees other tranches of the same ABS issues, making them more attractive to cash investors. The IB Group's involvement is thus expected to encourage originators to launch new ABS transactions backed by existing SME loans, while at the same time also making the placement of such securities with investors easier. The hope, naturally, is that in the end, banks will be incentivized to lend more to SMEs, knowing that they have the means to transfer such exposures to institutional investors. This EIB initiative goes hand in hand with similar ones whose objective is to promote greater transparency in the public ABS market to re-establish investor trust in bank loan securitization via the promotion of best banking practices in this area. Now, turning now to the possible sources of public money for SMEs, let me recall that among the SME most suffering from lack of finance are those operating in countries facing financial stress, such as in Greece. Greek banks are often unable to borrow and so unable to lend to SMEs, which therefore are facing unmet working capital needs of large proportions. The EIB has cooperated recently with the Hellenic Republic and European Commission to put in place an SME guarantee fund to support up to 1 billion of lending to SMEs in Greece, using 500 million from unallocated structural funds. Some 200 million out of this 1 billion had already been committed by the end of last year to provide much needed financing to Greek SMEs. Now, in several member states, there are structural funds waiting for being mobilized, and they could provide the basis for similar initiatives in support of local SMEs. Another initiative of EIB in Greece concerned the facilitation of trade finance, particularly the support of imports by Greek SMEs. Now, due to their low external ratings, guarantees issued by Greek banks for imports in Greece are no longer accepted by the banks in the export countries. As a consequence, Greek SMEs saw a shift from the normal delay payment system for imports to payment at the time of delivery and even payment before shipment of their imports, thereby worsening their liquidity positions. Now, in December 2012, the EIB approved a 500 million trade finance facility to support import trade for Greek SMEs by providing counter guarantees in favor of Greek banks. Should our experience in Greece be positive, similar trade finance program could be extended to other countries if needed. This is an anti-crisis measure that complements the longer-term support for SMEs already being provided by the bank. To conclude, while Europe's sluggish and uneven economic performance continues and there are significant downside risks, there is a compelling need to support growth and employment in Europe. In good part, this can be accomplished by providing adequate access to finance for European SMEs. We at the bank believe that more equity capital needs to flow down at SME level is crucial, and this should be available especially for small startups in local markets, but also for more established entities through private equity funds. Also, the offer of mezzanine and subordinated loans to the larger SMEs and mid-caps should also be expanded to enhance their growth potentials. An adequate supply of SME debt finance via banking channels must be maintained. However, while the role of banks should be strengthened, The SME debt market can also be supported by relaunching the securitization of SME loans, allowing for institutional investors to take part in financing SMEs. After a period of serious imbalances, the re-emergence of a European SME securitization market will be an important element capable of mitigating the credit crunch currently experienced by European SMEs. Meanwhile, we at the IB will continue to adapt our product offer to the financing requirements of SMEs, and access to finance for SMEs and mid-caps will remain one of our priority objectives. We are looking forward to increase our cooperation with the European Commission, also by making use of the new joint financial instruments within the next multi-annual financial framework in order to mobilize EU budget funds in support of SMEs. And we will, of course, continue our dialogue with all the other stakeholders, in particular with the European Banking Federation, BusinessEurope, and the other organizers of this conference. Thank you very much for your attention.
Hello. Okay, that's great. Good afternoon, everybody. Thank you very much, Mr. Gilibert, for those comments. And once we're at it, I would like to also thank you for the very good cooperation that the European Commission has had, and I'm sure will continue to have in the future on rolling out and managing EU financial instruments. I'm here today to moderate a very interesting panel, a very distinguished panel, and may I invite them to come and join me here to start the discussion right away, to be very parsimonious with time, and also to allow as much discussion and interaction with the audience as much as possible. So may I invite Mr. Thumann, Mr. Henri, Mr. Gilibert. Yes, as you prefer. Maybe Mrs. Almgren. I will introduce them one by one, of course. Would you like to sit over there? And maybe Ms. Almgren would like to sit next to me here. Mr. Gilibert.
It's a little bit a handicap panel, huh?
Okay. So you made it. Thank you so much. Have a seat. Thank you. I would like to perhaps just say a couple of words before I introduce the panel from my end. I am Joanna Drake, first of all. I come from the European Commission. I am in charge of the directorate dealing with SMEs and entrepreneurship. Of course, we are going through interesting times, as they would say in a novel. Interesting can be having many meanings. Interesting because we are at a stage where we are, well, hopefully about to roll out a budget for the European Union for the next 7 years. Interesting because amongst, as part of the budget, of course, are the upcoming financial instruments, and that is, I'm sure you know the acronyms by now, the COSME and the Horizon 2020, which will, I hope, open also new opportunities for SMEs. But we're also going through interesting times in perhaps the more negative and more sort of Dickens sense. And that is because we are at a point where SMEs are still suffering, according to the figures that we obtained until last quarter for 2012, net tightening of credit of about 12%. And what is the bad news, and perhaps more interesting in the Dickensian type of terminology, is that this will remain unchanged for the coming months. We are, of course, observing these structural problems which make access to finance more difficult for SMEs very closely, and we are updating our figures, as I'm sure all of you are also from your end, very closely. And we thought, of course, that this would be also a good opportunity at this juncture to discuss with the distinguished panel that we have here what, the question is, how can we unleash more capital, unleash more means, unleash more tools, perhaps calling them under an umbrella of alternative sources of financing in order to help SMEs grow and prosper, which is, by the way, my mission as the directorate, but more importantly, it is the mission of the European economy. I'm very lucky to have a very diverse panel of speakers here with diverse backgrounds, and I'm sure from their end they could provide us with their perspective, and I hope their propositions as well. We have agreed that there would be a 5-minute intervention by all 3 speakers. Of course, we have already heard Mr. Gilibert. I would like to present Ms. Gunilla Almgren, who is the president of UEAPME and also an entrepreneur herself. She is sitting on my right. She is one of the handicapped members of the panel. Ms. Almgren, thank you very much for your acceptance of this. I have on my left Mr. Thumann, who is the president of BusinessEurope, and he will also be giving us his point of view, plus a lot of experience that he's had. He's been president of BusinessEurope since 2009. He also has a 5-minute intervention. And last but not least, we have Mr. Henri d'Ambière. He's the acting head of the working group on export credit at the European Banking Federation. All 3 players not only having good observations to make, but I'm sure that they will also have good food for thought for us to build on. So, Ms. Almgren, I would like to start with you. I really would wish that all of us would keep the time. I mean, that would be up to me as well, but I'm sure you'll be getting into a lot of impassioned appeals, but we will keep to the time so that we have time for interaction with the audience, which I think is the value of this panel as well. Thank you very much, Ms. Almgren. The floor is yours.
Thank you very much, and I apologize for my handling of walking because I fell on the way back here from our office. So I'm feeling very bad. I'm feeling more for my foot than for banking right now, I must say. But dear ladies and gentlemen, dear SME friends, I would like to thank you very much for inviting me to this very interesting and prestigious event. It is a great honor to discuss here with you, even if for a business owner like myself, it is not always a pleasure to get an invitation from my bank or your bank. You know this saying from small business owners that bankers are people who lend you an umbrella if it's sunny and shiny and nice, and they can make money, but they will take it back as soon as it starts raining. Of course, it's only a joke, but as so often, there is something true in it. What we recognize is that banks, and especially commercial banks, are less and less able to finance risk. That's true for startups, for innovation projects, but even for business transfer to a next generation. This situation conflicts with the fact that the vast majority of our small businesses are and will be depending on bank finance if it comes to external finance. And just to remind you, 92% of all companies have less than 10 employees. My company has 3 employees. And only 40,000 of the 23 million companies have more than 250 employees. That is already the first challenge for financing business. Who will take the risks in the future? Currently, and this process started already long before the current crisis, the risks are more and more taken by the public sector via guarantee schemes or public loans, and even venture capital funds got in 2012 more funding from the public sector than from the private investors. Don't misunderstand me. We are fully convinced that this was the right reaction on the crisis, and we are very grateful towards the European Commission and the European Investment Bank for their support during the last year. Joanna, our Director for SME Policy in the European Commission, is the best witness for our joint efforts to make the next generation of programs even more effective as regards financial instruments for SMEs. Furthermore, we work a lot to open the regional funds for financial instruments. There should be no doubts that public support will always play an important role for SME finance to compensate for market failure. However, and I speak today as president of UEAPME, the SME Association of Europe, which represents more than 12 million small and medium-sized enterprises. The idea that taxpayers have to shoulder the risk of doing business in Europe is not our vision for the future. I am myself an entrepreneur with 3 employees. On the other hand, I have been in the board of a local bank in Gothenburg, and I have also been in the 6th pension fund in Sweden. So I think I have seen also the opposite side of what an entrepreneur meets daily when visiting a bank. Therefore, it will be necessary to develop banking models and products which allow the banking sector to take these risks and to redistribute them on the investors' market or share it with your shareholders and stakeholders. Currently, we are discussing models like restarting the securitization market, bundling of SME bonds, and SME stock exchanges. In all these areas, commercial banks can play an important or even leading role to drive such innovations. However, let's turn to another challenge. Very often we hear that the banking model in Europe has to be changed to make it able to finance growth and economy, real economy. While at the moment it seems to be more attractive to earn money with sophisticated financial instruments rather than with investing in real companies. I know that the future structure of the EU banking system is a difficult and tricky subject and followed the work of the Liikanen Group very carefully. Therefore, allow me just 2 observations on this subject. It is in the interest, especially of larger SMEs, that they can be served by one bank. Therefore, we are quite skeptical about a simple separation of commercial banking and investment banking activities. If the very risky trading book activities have to be separated, we would rather see that the trade finance and hedging of business risk stay on the commercial side. Point on a possible future landscape, we hear more and more, especially from very small companies in countries where the banking sector is dominated by very few large commercial banks, that the frustration about the relation with banks is growing. Of course, banking is business, as others too, and has to be efficient. Therefore, we understand that standardization and automation are necessary in e-banking, will be the future. However, if a business owner asks for funding for a next step of development of this business, and he has to present all possible information which is fed into a computer system that answers yes or no, while the business owner is not able to speak once with someone who has decision power. This creates frustration. Therefore, I would rather assume that relationship banking, especially for big decisions from an SME point of view, will be the banking model of the future, and if you want to reach SME clients, you have to be there where they are, and you have to make efforts understand them too. Thank you very much for listening to me.
Thank you, Gunilla. Thank you very much for keeping to the time. First of all, you set a very good example. You also set another good example because you've been very concrete and very to the point, as usual. So that is what we like to hear. Of course, I mean, I've noted, some of your very powerful recommendations there about how to reach out more to SMEs and basically to rethink a little bit the traditional models. I would like now to pass the floor to Mr. Jürgen Thumann, who is the president of Business Europe, as I announced earlier. He has extensive experience in the steel and metal manufacturing industry. From where you sit, Mr. Thumann, how do you think that policymakers should place themselves in order to really serve the needs of SMEs on access to finance? I'm sure that you have developed very clear and very concrete ideas with your experience and also with your role in Business Europe. The floor is yours.
Well, thank you very much, and thank you also for the nice introduction. Good afternoon, ladies and gentlemen. And let me say first, it is a pleasure and a great honor for me to be here at the EBF Annual Conference. Second, I would like to say that surely we are a little bit handicapped this afternoon, but on the other side, I will hope very much that we can perform to become the second highlight of this conference this afternoon. Gentlemen, I hope you did not misunderstand me. Well, coming back to your question, of course, as President of Business Europe and at Business Europe itself, we are, at first I would like to point out, not only representing, but surely representing SMEs. You know this and you are aware of this. Well, we are also, of course, representing the medium-sized and larger corporations. And therefore, at times, we have to be pretty fit that we can really take care of all those very small companies and also the very large ones. But I would like to start with some key facts concerning the economic situation, if I may, and the state of access to finance in Europe in a little bit broader way, if I may. But I invite you to interrupt me. I will not make it very long, I promise. We have seen some tentative signs during the first months, also in 2013, that confidence in the European economy is stabilizing. In some countries, quite well. As you can hear, being German, and maybe you know also, I have to say, and I can relate to everybody, that our German business community, and especially the industry, the manufacturing sector, is really doing very well. We just 2 days ago readjusted our projection for this year by increasing the number. We now expect in Germany at least a 3.5% growth rate for the industry. A strong and clear commitment by the ECB to safeguard the euro, steps towards a banking union, and progress on structural reform in a number of member states have altogether contributed to an improvement of financial stability since last summer. But Europe is now entering, and I think the last days, and I'm sure we will come back to this a little bit later, we really can observe that we are entering a very, very critical phase. A phase critical with regard to the financial stability and also its recovery. On the surface, as I've pointed out, there are signs of improvement, but I may, that is the expression I like most, we are walking on very, very thin ice. Extremely thin ice. Even so, when spring did not yet arrive, the ice is pretty thin. The pendulum, let me say, can quickly swing back if doubts about the ability to pursue necessary reforms in the European Union re-emerge. The doubts re-emerge. Access to finance, and I think we have heard already about it, remains a major concern, and I may point out here especially to the SMEs and for the SMEs. Both demand and supply factors continue to have a negative impact on levels of new borrowing and investment by companies. Reflecting recent uncertainty and continuing weaknesses in the economy, the demand for loans from many businesses remains subdued. But on the supply side, interest rates charged for bank loans to businesses continue to diverge. depending on both the size of the business and the country where the business applies for bank loans. Overall, as the latest ECB lending surveys highlights, the terms and conditions under which banks are willing to lend to business remain quite tight. This supply constraint will become an increasingly important issue as the economy starts to pick up and demand for finance increases. I think at the moment, most businesses have not really a shortage or financing issue. But when the economy will start to come back and grow, then we will really see how much financing most businesses will need. And let me add, and I'm sure we are all aware, bank lending is particularly important here in Europe, where companies depend truly on the highly on banks compared, for example, to countries like the US. There's no question that in the US, companies, also SMEs, can finance themselves much better by equity. So what needs to be done? Quickly, I would like to mention 3 points. Firstly, we continue to need to do everything we can to reinforce the euro. I think that's absolutely number one. And you asked me what's Business Europe's position. This is by far number one on our agenda. We have to safeguard the euro. As well as growth-enhancing reforms at national level, and this means strengthening the foundations upon which the euro itself is built. Of particular importance is building the banking union. Last days we heard some very good news there. And we are looking forward to the finalization and implementation of a single supervisory mechanism. But this must be followed by further action to strengthen bank resolution and deposit insurance schemes. Second, we need to ensure that financial market reforms strike the right balance. I shall turn to this issue just in a moment in more detail. And finally, we need to develop alternative sources by financing for companies. Let me focus upon what we mean at Business Europe by a balanced agenda of financial market reforms. Business Europe supports regulatory initiatives. But as I said, reforms must strike the right balance and be mindful of their consequences for companies. Basel III is a case on point. Tighter capital rules for banks are clearly needed, but this will obviously lead to more restrictive lending conditions for companies. And this will interact with other prudential rules, such as those linked to Solvency II for the insurance companies, such as equity and favors government debt. New accounting rules will also impact on capital allocation. I'm relating here to the requirements to bring securitized loans, on the bank's books, or rules related to the way financial institutions account for bad loans. Smart regulation must ensure that the right solutions are found and that policies are effective and proportionate to their scope and nature. Comprehensive impact assessment must therefore be carried out, which address the cumulative impact of different reform measures. And last but not least, part of that balance means ensuring that there is a consistent application and regulatory standards at global level.
Three, we do not speak often about us, and when we speak about bonuses, it's not for us usually. Okay. And there is no trader in activities. But it's an important activity for banks, and it's probably an activity which is more important for customers, and especially for SMEs, because SMEs probably depend more upon financing of their international trades at large companies, because large companies can find other solutions than working with banks. Sorry. Just a few figures. International trade is very important for the general economy. Exports represent roughly 1/3 of the GDP worldwide. And exports are growing at a pace which is 50% above the pace of global growth. So if we want to support the growth, it's very important to support export, because it's probably the best way to support the growth. Then a second point, which is important, according to WTO, it is clear that roughly 80% of flows linked to international trade are relying somehow upon a financial tool. So which means that without banks and financial tools, international trade would be much more limited or almost inexistent. So this is the second point. And we have a proof of this, which is on the reverse side. In 2009, the GDP of the world declined worldwide by almost 3%, but exports declined by 12%. And at that time, the funding of banks declined in a proportion which was probably much bigger. So the lack of funding provoked and supported the lack of export, which affected the global growth. This was very clear in 2009. And we also see that banks are more and more cautious, and they use more and more insurance to secure their flows, either long-term or short-term, because the growth of insurance, of recourse to insurance, the growth is roughly 10%, which is much higher than the growth in international trade. So, is there a place for new player? And the answer is clearly yes. I think that in short, we have to make the distinction between short-term trade finance, according in common words, and medium and long-term export finance. In short-term, we have unfunded products like guarantees, letters of credit, you all know to manage your business. There might be newcomers in these businesses, and there are already some of them which are there. You have insurance companies which are acting on the insurance field, and you have banks from emerging market which are making competition, which are tough competitors to European banks. So we have newcomers coming in this market. On the funded trade products like discounted letters of credit, forfeiting, there also is a room for newcomers, people who can refinance and which are attracted by the quality of the asset and the short duration of these assets. There is an inquiry which is made by ICC, International Chamber of Commerce. We were able to convince in the range of 20 banks to provide their data on the quality of their assets and the losses they are doing in short-term trade and medium and long-term export finance. And it is very clear assets in international trade are very good ones in terms of risk. And so this might attract investors who will look for good risk. And also, once again, we might find some banks from emerging markets which want to play a major role. Which might be the obstacles to this? First, trade finance is a mass business, is a flow business. And so we need for very large back offices. And so there is a large investment cost to be accommodated at the beginning. So you cannot enter at once in this business without investing a lot at the beginning. We are facing with a lot of regulation. We have the financial ones, it was commented earlier today, like Basel III, but we have also the non-financial ones, like KYC. If I have to do a KYC for a small bank in Turkmenistan, maybe in my bank, I will be reluctant to do a study, so I will not cover anymore this bank. So, and you have other regulation. Some people say we have to control the goods which are under the LCs. How can we control? This will mean more resources to control what we are doing. And then the cost will increase and maybe we'll be totally inefficient. And then the other thing is there is on some side, a lack of education of knowledge, and this might take time to acquire this. On medium and long term is there a role? Yes, there is a place for new players. we have to keep in mind that the investment which are financed might be very long, 2 to 5 years construction, 8 to 15 years repayment, might be until 18, so okay. But there is clearly a role because banks are facing with some difficulties to fund very long-term projects, especially in US dollars. It's clear if we are in Europe. And then there might be a role either for public banks. In Europe, some countries develop public banks to support the funding of exports. This exists not in all countries, but in some countries. And we also are seeing that some institutions, like pension funds, insurance companies, which have long-term commitments, and we need to find long-term assets, are interested in funding long-term projects because it's a way for them to match their obligation. And it's more new. We clearly see that there is a possibility to tap the bond market in addition to the loan market, either through direct bonds. You see that some Airbuses and Boeings are financed on the bond market today with the cover of an export credit like Euler Hermes, COFA, CCGD, and so on. And you also can use our export credit to refinance ourselves on the bond market. One problem we are facing with is the liquidity of these assets. There is no exchange on this market. These are good assets, so we do not trade them. So liquidity is limited. And the flexibility of banks is not often the flexibility of pension funds. Are there risks linked to this? Yes, probably, but I prefer to see the glass which is half full. If there are risks, it's because there are opportunities. The first two opportunities we have to keep in mind if we introduce new players in this market is first, they will bring new volumes, increase volumes to deal with the projects, and second, they can contribute to lower the pricing. Then there are some risks I mentioned before, but I think that the risk of loss of knowledge, because the knowledge today in the bank is not in the pension fund, is important, and the flexibility given by the bank is important, because if we construct a project, the bank is able to understand your request. Some financiers are not able to do this. And it's also part of a global offer. And so when you use a bank to do international trade, you use it also to do other things. So the bank has a global view that some other players do not have. Then we can insist you have the slides. Then, is there a role? Will we enter in the new landscape? The answer for me is yes. We have no choice. And I think it's better to be the actors of our change than waiting for it and suffering it. So I say yes, there will be a new landscape. We still have a key role as banks to play in it, but we will have to find solutions to accommodate and introduce funds which are able to bring us more capacities, entities which are able to deal with small deals we are not able to deal with, and to do it at a low cost, because some very small deals are not of any interest for banks, and maybe some other entities can do it. And new players can also bring very long-term financing, especially in US dollar, and we are short of this to support the industry in general. Thank you. So yes, there are risks, but opportunities, and we have to take advantage of it.
So if I may, thank you very much, first of all, for your very detailed remarks. If I may perhaps take the opportunity, I'm looking at the watch and it's about 20 minutes until we have to wrap up. May I just perhaps hazard a supplementary question to the members of the panel, for which I would like a short answer if possible, and then I would like to open the floor for some interventions and questions. Mr. Dampierre, I take the opportunity, perhaps you said, yes, we need a new landscape. But, you know, is it do you see this more of a demand or a supply problem? How do you see credit growth and credit conditions going forward?
It's on both sides. On the demand side, banks are very often unable to, for medium and long term, for export finance, we have difficulties to offer the very long-term loans the market is requiring. So we have a problem there. And then we see that the other side of the fence, we have clients who are asking for it. So we are not able to match, to make the demand and the offer match. So there is a demand, there is a need for this here. On trade finance, I think that the willingness to do more is there. Most banks consider that it's short term. But the problem is the cost to do it. And the problem is, if it is too expensive, we first, some banks might decide to drop and to leave this activity because it's too expensive to maintain with KYCs and all the paperwork. And on the other side, if we are dealing with SMEs, we have small deals, and the interest of dealing with small deals is rather limited. So we have, yes, we have some problems there. So we need to find solutions to introduce new players and to fund, because if we are able to reduce the funding needs, we will help everyone, or to find the
perhaps a cheeky question now. The likelihood of this happening, of the landscape changing, what's your assessment?
It's happening. And
fast enough to...
It's happening.
To address the needs?
Banks from emerging markets are stepping in. So if we want to live within Europe, okay, nothing will occur. But if we keep our eyes open, we see foreign banks stepping in. So it's coming. And then we also see for medium and long terms, so it's for trade finance, and for medium and long term, we see that insurance companies, pension funds have the money and they are looking for solutions. So we said 2 or 3 years ago it's almost impossible. Today we say it's complicated. So we open the door. So they are there. So it's happening.
Thank you. Mr. Thumann, yes, I will ask you, of course you can pass your comments, but I'd like to ask a supplementary question to you. You gave us very clear views on what needs to be done on a structural level in Europe for the euro, etc. But if we have perhaps a more specific question on how you look at the future financial instruments that are being hotly debated in the context of the EU budget, where do you think that the European policymakers should set their priorities there? And what do you think of alternative sources of financing if banks do not want to lend to companies, or perhaps at a too high rate? How do you look at crowdfunding, peer-to-peer lending, etc.?
Thank you. May I first comment about what we have heard? I hope nobody will misunderstand me, but if I do understand that we are talking here looking at the European situation, but I think from a business point of view, and therefore I wanted not to disagree, I want fully to agree with you and re-emphasize, as we are growing more and more into international businesses, even for SMEs, at least the medium-sized and the larger ones are slowly also becoming global players. And there is my experience with my own company, that as long as I look at Europe, yes, we have an issue when we look at European banks, but I think that is more a problem of our Eurozone issues, without going into details here, because we are having increasing possibilities of financing, refinancing, also export businesses, if we are doing them, if we are not doing it locally, with a lot of banks. And I can refer here from the United States all the way to China, with local banks, also with the American banks. I mean, these three gentlemen here, when I look at them, they know that, of course. But my point is, we need our European banks, as long at least as I'm a European, to go with us into the foreign countries, into the globe, and really finance our business. Because they have one advantage: they know us better, and they know the type of business that we have. When you were talking about, if I didn't misunderstand you, about up to, what, 15 years, I think you had it down here on the screen, for learning and really enjoying a nice return on your investment, yeah, that tells us clearly how many years it will take. I'm not so much looking at the emerging countries, I have to say. I'm also looking at the BRICS. I'm looking at the United States. And some of you know that I'm a great fan or supporter that we come together with this transatlantic marketplace with our American friends, because I think Europe has only one chance to compete successfully in business, in industries, and also in the bank, if we really cooperate much closer with Americans and with some other important countries. So having said this, was my point. I was very much into it. Now can I?
Yes, the two questions I asked were regarding the future programs of the European budget. I'm referring COSME, the one that is being produced.
Of the European budget.
Which are still hotly debated, as you are well aware. There is one instrument called COSME, or the financial instruments on the equity and also loan guarantee type of instrument, and also one for more innovative and research-driven companies, and that is Horizon 2020. This is, of course, apart from the regional funding and all the other types of funding. Where do you think that European policymakers should set their priorities? You mentioned internationalization and SMEs, for instance. I have my doubts of how far SMEs are really becoming internationalized. Our figures are very low when we look at those.
There I think they
I was going to ask
Gunilla
to comment about that.
You are in a better position than I am. Talk about the SMEs only, but my knowledge and my experience that also smaller companies, how can I describe it? Let's say with 100 or 200 employees.
There are SMEs, yes.
Are SMEs, and they are growing also the export business. Some of them are even building up a second small operation in Asian Pacific countries, doesn't always have to be China, or in other Eastern European countries. So I have to say there is a need also to support SMEs more so than the larger and real large even privately owned. You know what the German Mittelstand word means. I think there is a different issue. Now coming back to your question about the budget, to be perfectly honest with you, I have to say I cannot be very specific at this moment with you because I'm not too well prepared for this question, and I'm always straightforward. I'm not giving you a nonsense answer. I'm more, when it comes to the European budget, concerned that we are still spending too much money on agriculture. I hope you don't misunderstand my answer. And I think we need to do a lot there, and Business Europe is very aggressive there and takes a very strong position.
Thank you so much,
That was
Mr.
my
Thumann.
honest answer.
I appreciate your honesty. I will come back to you, Mr. Gilibert. I'm sure that you have some comments on this particular point, but maybe before I do, I'll pass the word again to Gunilla and try to have her views on what she thinks going forward, and the European budget European policymakers should set their priorities and where, and what do you think of alternative methods of financing, crowdfinancing, peer-to-peer lending, etc.?
As an entrepreneur and as a president as well, but I must say that very much of the SME business is very much local. And to be able to develop a business is, of course, very individual also. It's very important to know that, and also remind yourself, everybody, that behind every SME is an individual who has to have the courage to develop his business, and for whom should he or she develop the business. So I think it is very important as well, with the access to finance, to find an easy way to find the access. Kind of one-stop shop. As we see in Sweden, I am in the board in a little small company, and I think half of the time they use to run around looking for money. It's high technological, so they really need to use their time for things that would be used better in another way. And guarantee schemes, of course, is very interesting, but I think it should be combined with the banks, not separated, as I see from my Swedish point of view. We have to make it very efficient for the entrepreneur. And also, of course, as I mentioned to you earlier, and many of you know, that in Sweden, for example, the SMEs, they pay 3% more for loans in comparison to the larger companies. And this is an extra cost for them when they think of internationalization or to develop or investment or whatever it is. We think that we see that we have a lack of competition in the market about finding money, access to finance. That's what I can say.
Thank you. Mr. Gilibert, I have to pass the word to you because I'm sure that you are wanting to pass a few comments, especially on the financial instruments going forward. We had a lot of comments here on the importance to the structural economy, shall we say, of internationalization in general of European companies. Do you have anything to say regarding the portfolios of the financial instruments and how they are used? Can they be used for internationalization? And what do you think of alternative sources of funding?
Thank you. The EIB group, that is the bank and the fund, have now a long-standing experience in managing this financial instrument. It is money that available from the central budget of the Commission, both in terms of infrastructure financing and in terms of corporate lending. And we have what we call the risk-sharing finance facility, which is a co-lending initiative between the EIB and the Commission that supports innovation and R&D at corporate level in Europe. We have been using this now since 2007, 2008. We have about 10 billion loans out under this facility, and we started essentially to lend to large corporate for innovative projects. But over the years, we have moved down to our mid-caps and growing also towards SMEs, essentially in an indirect way that is working through banks, either in terms of loans or in terms of guarantees. So for us, it's been a very enriching experience, and we are eager to roll into the new MFF under Horizon 2020, under COSME. We have a lot of ideas. There is now out in the market a certain sense that we have developed a brand name, RSFF. People start to take notice. So we are very positive going forward about this. One of the objectives, as you said, is also to promote the internationalization of our mid-caps company, SMEs companies. So we are developing products in different areas, in different forms, both equity, guarantees, and debt. Also within that, both senior and mezzanine debt for mid-caps. And we also are targeting particular areas such as energy efficiency. So we are very positive, we are ready to go. We are just waiting for a final information how much money will be available and when and under which form.
Thank you very much. I did promise you 15 minutes of question time, but questions to the floor, but I have to sort of go back on my word a bit here and reduce it to perhaps 7 minutes. In all. So may I open the floor for questions and comments, and what I would ask you is, if possible, please identify yourself and your organization before you put your question or comment. Floor is open. Anyone? Yes, we do have a taker at the back.
Geoffroy de Carbonnière. All this sounds very good, but how do you set the objectives for these funds or these instruments in terms of returns? What are you expecting you as a manager of these products? Because there are two sides always, and in order for this to work, you need to make sure that this makes sense for everybody. So the funds need to make a return. What kind of returns are you targeting?
Are you addressing this question to anyone in particular?
Well, it is for anyone in particular, for everybody on the panel.
Okay.
Because of course,
I think I'll take 2 or 3 questions, and then I'll invite the panel to make comments given the short time. So can I have 2 or 3 questions before we answer the gentleman? Comments? Nothing else at the moment? Okay, so I invite the panel to make the comments at this stage. Maybe we get more inspired questions. Who would like to start?
Thank you. I believe the question was what are the criteria that are underpinning the utilization of new financial instruments, in particular public money coming from the budget of the Commission. We have a number of fairly fundamental principles. First of all, we have to address a market failure. So we must be satisfied then when we use public money, we are not crowding out private investors or private agents, but we are replacing the fact that they are not present. So there must be a visible, proven market gap to be filled. In this case, lack of finance for mid-caps or lack of certain types of finance, for instance, equity or quasi-equity capital for SMEs in Europe. Second, this instrument must be self-sustainable. That is, they should not generate losses going forward, not credit losses, but not even, from a ministerial point of view, that they've been managed prudently and with certain coherence in terms of basic financial principles. And then the pricing that we apply should also be essentially market pricing, whatever this means, because as I said, most of the time we are working in a market that does not exist. There is a market failure. But these are the three main principles that we are trying to observe when we are using public money.
Any other comments from the panel? Yes, Mr. Dampier.
And I also will add that maybe in some cases we are also looking for this public money in some banks, especially if I take the case of export finance. We have to keep in mind that in Asia, in the US, in Canada, in Australia, there are public vehicles which are funding export credits and which are much more efficient than commercial banks. So maybe in some cases, as long as it is a sustainable model in terms of pricing, of risk, it might make sense to develop this in Europe to support exporters. We only will face with the competition coming from outside of Europe.
If there are no comments from the panel, I'll invite the floor to come up with some more questions or observations. Any questions? Not yet? No inspirations yet. Okay, I just wanted to ask perhaps a question to the panel. We're talking a lot about alternative new landscapes that are developing, alternative methods of financing. Do you think that this is a fashion or more of a permanent trend? Is it addressing a need, or is it because the market is evolving? Anybody?
Thanks. I mean, my personal feeling is that, the entire framework of the European financial system is being put into question, is being redrawn. It will take time. We don't know exactly what the final direction will be. But in my point of view, we will end up with a system where banks will be less important, less centric than has been the case so far. So in this process will take a few years. I guess we will have to seek, maybe by experimentation, by innovation, new financing sources, be it for SMEs, but also for other situations, such as as EIB, we are a traditional lender for infrastructure projects. And we, as well, we are looking for institutional investors to come in and play a role in this space, because simply the traditional commercial banks, for a number of reasons, are completely upset or retreating. So we are looking to the Canadians, to the Americans, maybe to the Asian institutional investors to buy bonds in infrastructure projects, the project bond initiative. But I mean, it is something that applies also to SMEs. As I said, restarting the asset-backed security market for SMEs is, I believe, a fairly strategic and fundamental objective that is coherent with the fact that banks, I believe, going forward, will be less and less present in our financial system.
I know that we have to wrap up, but I have been asked by Gunilla and also Mr. Thumann to actually pass a remark. So I ask you to be very concise and pass a very final remark so that we can close the panel.
Very quickly, I just want to repeat that it is very of great importance for especially the small businesses that the instruments are very clear and that they are combined with efficiency, because the worst case is that entrepreneurs don't believe in them, they think they are not good, and then they avoid them. And I think it's very important also to work even closer with the banks, existing banks, so that we can have both understanding and development of the regulations on the EU level, so that we can see other risk-taking instruments.
Thank you, Gunilla. Mr. Thumann.
Then I make it very short. I just didn't want to miss the opportunity to say here that we certainly do need in the business community, in the European business community, also when we go global or international, universal commercial banks, European banks that are willing to go with us to the foreign markets. So please, let's not forget that.
Thank you. Last comment.
Just, and not to answer your question, it's not a fashion. I think it's a consequence of Basel III. And we are asked to use liquidity. We do not need to go in Americas. There is liquidity in Europe. We'll have to use it a different way. Banks will remain important, but will not be alone.